Apple shares under some pressure today after earnings. Investors weighing iPhone sales growth and record services revenue against the lack of clear commentary on AI-driven demand. Joining me now is top Apple analyst Erik Woodring of Morgan Stanley. It's good to see you. Welcome back.
Thank you very much, Scott. Good to see you as well.
So post-report, you suggested that the shares are going to remain, I think the words you use, range-bound.
Correct.
But you think the downside's limited. Expand on that. So
Sure.
why first, I can understand why you would say range-bound, but why do you think the downside is limited?
Sure. And maybe the caveat to that statement is if we see a deterioration in the data, then of course there might not be limited downside, of course. But knowing what we know today, if I think about my earnings for fiscal year 25 of around $7.25, Apple's been trading close to about a 30 times multiple. Maybe you discount that a few turns just to be conservative. You're looking at something like a $200, $205, $210 stock. It's $222 today. So we're talking about relatively limited downside in the event we don't see the data deteriorate. And again, in the event we can look forward and get excited about Apple Intelligence, the iPhone 17, and look beyond just the near term, my price target's $273. You know, there's more than twice as much upside that I see kind of near-term downside. Even though of course, I did say, and I stand by it, that I think the stock will be range-bound for a handful of weeks until maybe we get closer to the end of the year.
We got no real guidance on AI demand for Q4. Mm-hmm. So it's one thing as an investor, I'm not sure what to do about that. But right. How do you, as an analyst, whom I'm relying on, do you feel like you're being forced to guess on what you think demand is going to look like in the fourth quarter? What the degree of any upgrade cycle may be, because we just really don't know?
Sure. I mean, I don't think it's necessarily very different from any other December quarter. There's always an unknown going into the holidays with a new product. What is different about this cycle, of course, is that the key feature has been Apple Intelligence that is really only available to U.S. consumers as of this Monday. And so it is just so early to make a claim on whether Apple Intelligence can drive that inflection in iPhone demand or not, that maybe there becomes a bit more guessing game this holiday period relative to past years. But this is always the course of business, which is let's track demand, let's track what's coming out of the supply chain, try to tie those two together to make an informed decision. The forecast that we've come out with the December quarter, about 123 and change of a billion of revenue, is the latest viewpoint that we have today. But we'll have to continue to track the quarter. Again, the holidays are very important. They can fluctuate significantly year to year. That job is no different this year. It's just there's an added dynamic, an added factor in Apple Intelligence, the newness of it, that might make this a little bit more of a dynamic quarter than last quarter.
I'm trying to, I guess, entertain the idea of what happens if this is a very prolonged and rolling upgrade cycle,
right?
Which is very, very hard to calculate.
Correct.
And coming out of the pandemic, which is obviously, wreaked havoc on supply chains and consumer behavior. It just warped the way we lived for a few years.
It did.
And I think you can make the assumption that it may do so for the next few years when it comes to consumer products.
Correct.
We don't know what we really need yet. We don't know what we really want yet. And thus, this might be rolling.
Right.
What do I do with that?
Right. So I think you are seeing that with the iPhone 16 today, which is Apple Intelligence is really too new to drive those real upticks in upgrade rates yet. But it's kind of lingering out there as something that I think consumers are interested in, but need to learn a bit more about. And of course, for those of us that aren't in the U.S., need to actually be able to upgrade to. Generally speaking, consumer electronic spending today is quite weak. It's been quite weak since the kind of middle to end of 2022. And, we published on this monthly, there hasn't really been any end in sight to this pain. We see a lot of challenges in the consumer hardware world. And so that's why, I think you're seeing part of the iPhone 16 performing the way it is because of the macro. In terms of the rolling kind of upgrade cycle, of course, that potential exists. Where I stand back and I kind of look on this cycle or Apple Intelligence and what's coming to market is, one, there are still 700 million plus iPhones that are 3 years old that are not eligible to run Apple Intelligence that need to get upgraded. So that base is there. There is pent-up demand and elongated replacement cycles. And you just need that catalyst to turn this from a potentially rolling upgrade cycle to one that can be a bit more severe to the upside. And when we look to the iPhone 17, again, what we've been talking about is Apple Intelligence will be in the market for about a year before the 17 is released. And so the consumer will have a better understanding of what that can do from a utility value standpoint and help to drive upgrades there. Also, we still do think there will be a slight form factor change, even if minor, with the iPhone 17 switching from a Plus model, which kind of gets lost in the mix, to a slim model, which can actually be very attractive for users that are looking for a different form factor than they've been able to get. Form factors are usually a big factor in driving upgrades historically. That's why the iPhone 17 is interesting, is you have Apple Intelligence, you also have a bit of a form factor, and you have them coming together in 1 year.